You will never become a consistently profitable trader without a trading plan. You need one. And in this video, I'm going to help you set one up. So we are going to look at what a trading plan is, what a good plan includes, a trading plan that you can use. So we're going to test one together in real time, how to test your plan, it's going to be weaved into that, and how to validate your plan so that you know it is profitable. So first things first, what is a trading plan? Well, a trading plan is simply a systemized list of rules that surrounds your analysis and your risk management, turns it into a process that you can continually repeat every time you come to the markets. And a successful trading plan is going to cover three core elements primarily. First of all is our analysis methods. What kind of macroeconomic or technical concepts will you be using in your day-to-day trading? And what will that look like? Such as top-down analysis, different entry criterias, the actual concepts you'll use, whether that's trend lines, support and resistance, supply and demand, Wyckoff, whatever it may be. And the analysis needs to cover everything from the very beginning all the way through to your management techniques. So will you go stop loss to break even? Will the trades be set and forget? Whatever it may be, it all needs to be covered. Once your analysis is covered, you then need to look at risk management. You need to try and build a process, once again, systemizing your risk control methods. So this is going to include things like what kind of risk reward profiles are you going to look for? Risk reward, for those who don't know, is simply how much are you going to risk to return how much. So for every $1 you risk, you probably want to aim for $2 or more in returns. So you've got positive risk to reward. You pretty much need to build in a minimum risk reward that you're going to focus for. If you do that, then your system edge becomes a lot clearer. If you're going for a 1-to-1 one day, a 1-to-2 the next day, and then a 1-to-0.5, your system's going to be kind of all over the place. You need to put a minimum in place. I recommend 2. We'll look at that in just a moment though. What does the win rate need to be? And what kind of win rates is your system through testing going to achieve? Now, I'll show you how we can kind of work this information out. And we're going to go through from start to finish of building a plan, testing it, and then having a look at the results that it forms. How will you manage your stop loss orders? We kind of brought this in on the analysis method when it comes down to trade management. Pretty much, in a nutshell, just get every risk management concept that you need, risk reward, win rates, trade management, risk per trade, all of that stuff. Try and systemize it as much as possible alongside analysis. The next thing then is just rules. Additional rules that you put in place, things like loss and profit limits. If you lose X amount per week, you'll stop trading. If you make X amount per week or month, you'll also stop trading to make sure you lock that profit in and don't just go and risk it all and lose it all again. How many trades per day, how many trades per week will you allow your system to take? You don't want to be taking 10 or 15 trades a day. Most traders will absolutely not want to be doing that and will lose money by doing that. But some traders do. So building that into your plan, say you can only take 1 trade per day. Well, now you know you're going to take the best trade that that day offers. You're not just going to be firing off at every random position. So other guidelines as well fall into place here. We'll take a look at some of these in just one moment. With these elements of a successful trading plan in your mind now, we're going to go over to Notion and FX Replay, which is a backtesting platform. I'm going to teach you a simple trading plan. We're going to take a look at building one together. Then we're going to get into trading it on the charts and we'll see how it goes. Then we'll take a look at the analytics. So let's get to it. All right, so here we've got a base trading plan that we're going to look at today. And we're going to backtest that on FX Replay, which is a backtesting software. So the trading plan, we're covering the risk guidelines and the analysis processes, as we've just mentioned, and this is what we're going to be working with initially. So our risk per trade is going to be 1%. That's going to be static, fixed at 1% for every single trade we take. Otherwise, we get that problem covered actually in the first class, right? So we want to make sure we stick to 1%. We don't want to use dynamic. We don't want to be using 0.5% today, 1% tomorrow, 2% the day after. And I think 1% is a nice central baseline. Loss and profit limits. I've set 2 trades per week as our loss limit. So if we lose 2% in a week, we will stop trading. We're not actually going to see that because we're going to be trading higher time frames, but this would become viable when you're trading multiple assets at the same time, right? We're just testing UJ today. Profit limit's going to be 8% for the month. So if we make 8%, we will stop trading. That way we lock in the profits that we've made and we don't risk giving it back. Minimum risk reward is going to be a 1-to-2. So we will only get into a trade if we have the possibility to risk $1 to make $2 or more in returns, right? We won't risk $1 to make $1. It's got to be a 1-to-2 or we will not get into the trade. When it comes to our analysis process, we are going to stick to primarily the 1-day time frame. Now, you might want to use top-down analysis where you go from the weekly to the daily to the 4-hour to the 1-hour to whatever in your own personal trading. But for this class, we are going to stick to the daily because I want to keep things simple and explain these ideas to you as opposed to getting really deep into a strategy. So 1-day time frame is what we're going to use. We will leave open the potential to refine to the 4-hour time frame if it looks like we need to do that. So for example, If we're looking for a daily area to get in, it's not very clear. We go to the 4 hour at minimum to then identify that opportunity. And our actual step-by-step process will be, first of all, identifying the trend. So are we going up or down? Then we're going to look for supply and demand zones in line with the trend. That's where we're going to enter from. We're going to enter with buy or sell limits. Buy limits on demand, sell limits on supply. When we're in trades, we're going to set and forget them, meaning we're not going to alter stops. We're not going to go break even. We're not going to do stop trailing. We're not going to do partial taking. We are going to enter, and then the trade will either get stopped out for a loss or hit the take profit for a return. When we're actually looking for our targets for our trades, where to put our take profits, we're going to use open supply and demand. And if that fails, if we can't find a clear open supply or demand zone to target, we'll then move on to using next swing highs, okay, or swing lows. That is going to be not as great. So that would knock down the confidence scale of trades or the quality of the trade a little bit, not because it makes it any more likely to lose, but because it's kind of the second best to using open supply and demand. And basically, we're not going to be able to extend the targets as far, targeting swing highs and swing lows as we would if we were just targeting supply and demand. But that is the secondary, because obviously sometimes you do need to compromise. So going over to the actual chart then, we got our plan in mind. We're now going to start testing. We're going to do 6 months up to around the start of July. I set this simulation to end. So we're starting on the 1st of January. And what we want to do first of all, obviously daily time frame, that's where we are, is identify the trend. We want to make sure the market's either going up or down. So from the very low of the trend here, we've started to see breaks in structure. These breaks in structure indicate that the market is indeed moving up. They are forming higher highs, right? Market that's forming higher highs and higher lows is uptrending. Taking a look at the significant pullback points then, this is a higher low. We have another higher low here. And then of course we just have the low of the trend here. So the actual trending fashion of this market starts pretty much come down to this point. We have this low, higher high, higher low, higher high, higher low, higher high, right? That's what the trend looks like pretty much from where we are right now. We can kind of pull from this that we are in an uptrend, because unless the market breaks into this low, it's going to continue forming higher highs and higher lows, right? So we are in an uptrending market where realistically, we then want to be looking for buys. Generally, what we'd want to do to kind of increase the probability of winning trades would be to kind of wait for some of these smaller daily structure here to break. So for example, if we were to see the market come and close over this low or high, that would then shift the daily here, so this daily trend, into an uptrend alongside the larger daily trend. So if we got this movement, we would then follow out the system by looking for our demand zone, and then we would look for a pullback to buy from, okay? So then that's where kind of our trading would begin. And if this doesn't happen, obviously we are in a demand now, so it seems quite probable. Uptrend, demand zone, all good. But if that doesn't happen and we get a breakdown, well then what we would do instead is just follow the existing bearish daily structure, because we would then anticipate that this market is changing direction and starting to move lower, okay? Let's run this forward a little bit. Initially, obviously, not going to really know immediately. So the first thing we note here is that we have had a push and break over that high, but it is just a wick right now. So what you could possibly do is look for pullbacks and buys, but because we want to make sure that the trending structure is moving with us to pretty much the most favorable degree possible, we would prefer to wait for an actual proper closure above this high. So if the market did this, then we could look for our opportunities to buy and continue the trend, okay? So running this forward a bit, there we actually have a closure. We've started to see significant momentum moving. So what we could actually do is use this demand potentially for a long opportunity, right? This is something we could keep in mind now that we've had this push and break. So this here has actually closed over this previous high. It hasn't closed over this wick yet, but it does provide the closure that we needed to see past the previous high to start validating long opportunities. So if we were to get into this trade, we have buy limit as our entry method, stop beneath the low, and then we want to target open supply zones. So that would be our open supply there, 146.907. That, of course, however, is not a 2R trade. So if we try scaling in the stop loss to as close as possible, that's going to be a 1.8%. This is where we could potentially start looking at, is it possible to refine onto the 4-hour time frame? So I actually do see slight opportunity here this gray candle, so I use last candle before the impulse for my supply and demand zones. This gray candle is the last candle before the impulse. So we could actually go ahead and use the 4-hour refinement like this. We could have a stop loss under the low still for the daily. We only really want to use that 4-hour for refining trades. Past that, we are back to the daily. And this would provide us with a 3.37% trade using 4-hour entry, buy limit on demand, stop loss still under the daily low, target into the next daily supply, right? So there. So now what we'd want to do is just place our order, which we can do because we're using a simulator. $2,000 risk, that's 1%, $6,700 potential return. We want to use a buy limit. So let's throw that on there like that and see if this trade gets triggered. So as you can see, we reacted from the daily demand, not the 4-hour. So we can go ahead and remove this now because the target's already been met. When the target's been met like that, it's unlikely the market is going to come and pull back for us. So what we're going to do from this point onwards is just move on to the next opportunity. Nice and simple. Obviously the daily would have been okay, but the risk reward was simply not good enough to take that position. But what we have had now, taking a look at this, is a closure above this supply, which pretty much opens doors to this supply up here. We know now that this is a bullish trend, right? We've got actually an extreme supply at the top. And because we're expecting this market to move into an uptrend, remember the bigger daily picture, we are looking for new highs to be formed. We'd say this target up here could be a very nice target for us to trade into if we get an entry, okay? So what we could actually do at this point, if we take a look at this, we got daily retest, daily retest. We could look at this candle here. I just like to use last candle before the impulse. Now, obviously, as we can see here, we have pretty much consolidation and then we impulsed away. So that's where I'd personally, at the moment, like to use for my trade entry if the market pulls back to this level. And then if we form any other areas after that, well, then we'll work with those instead, right? But for now, this is a good little trade. So I'm going to go ahead and place an order. And then we'll see what the market gets up to from this point onwards. See if we can get a tap in here. Okay, so we've been tapped in. We're now at risk. We've got 2.6% or 2.6% potential return. Take profit then would be a win. Stop would be a 1% loss, which would be $2,000. But we've had a very nice reaction so far, tapped into demand. We're starting to get a push up. Now, remember we said we are set and forgetting these trades. So we're not going to do stop loss management, which means there is possibility of it flipping on you, but that's just how it is, right? There we go then. We followed through towards the target. That's going to be trade number 1 that actually got triggered. The first trade would have been nice too, but the risk reward wasn't good enough. Hindsight, could we have continued it through to where we are now? It would have been good, but we didn't know that at the time. So targeting that nearer supply was probably a good move. So there we go. Taking a look at the realized profit, we're at $5,000, but we are towards mid-Feb. So with a daily time frame system like this, where you're using daily and at lowest 4-hour, trades are going to probably come around about once a month per asset, right? So Euro USD might get 1 trade, UJ might get 1 trade, GBP USD might get 1 trade in a month, right? So you're probably looking at trading 4 to 5 different assets and then seeing how you perform, basically averaged out, because it's going to be a very low frequency trading style. We've taken 1 trade here and we are pretty much just a month and a half into the year, right? I'm fine with that. I think that's fine. But you just got to keep in mind that when you are trading higher time frame stuff, there is that possibility, okay? So it's not going to be super high frequency. Right, we're going to leave that on. If we take a look at what we've got now, then we had a push up from this demand. We had a push from previous demand. Then we've had a push from this demand. So just here, last candle before the impulse. So this could be a good point for us to buy from for a next potential trade. We're in an uptrend. We're continuing that. I guess what we should probably do first is see how the market comes in about this high. I do think, to be fair, we're in a clear uptrend on the daily. So targeting, now that we've started pushing with some significance, targeting just continuation of the highs in that larger daily trend, this daily trend here, would be wise. And I think this would be a nice opportunity to continue buying. But we're going to see if a nice clear supply zone opens up for us to potentially target for a position. So see, because we're daily time frame trading as well, we are going to be waiting a while for trades to form. So just this range here is about 2 weeks of trading, right? Where we haven't really done anything except go sideways. So you want to obviously have a collection of different assets to pick trades from if you're going to be swing trading like this. If you're day trading, you can sometimes work with just one or two different assets because you're going to get more opportunities. So we're going to target the swing high for a long here. I'm still liking the idea of longs. I think everything's adding up towards that. This trend is now bullish, in line with the larger daily trend being bullish. Swing high seems a clear target. If we had another supply to target, we would do, but I don't see one right now. So we're going to place this order and just see how that goes. UJ, obviously, when we take a look at this price action, has been a very clean trending market. We could even see previous examples where these same setups will have worked multiple times, right? We have demand, come back, retest demand and push using some of the more internal structure. Here, demand, breaker structure, blah, blah, blah. There's so many setups that we could have taken using the past price data here with this exact system that we're looking at now. Because it's a strong trending market, we could pretty much presume it to continue working quite nicely here. We've been blessed so far. This is a nice movement. First trade was a nice movement. This is like 2 trades. I mean, let's see how this goes. We do have set and forget rule. Generally at this time, realistically, I would be making dynamic exits, so I'd be getting out of that trade as opposed to leaving it just to catch the one more pip. But we've let it go anyway, follow those set and forget rules. That's a 3.64% win and a 2.62% win, which on a $200,000 account, which remember you can get these funded, is a $12,000 return. Okay, very, very good stuff. Now, presuming we are pushing to new highs, we may be able to just follow the same exact format again for a new trade. So there's a couple areas we could look at here. We can look at a full, complete pullback towards this area. And then the other thing we could do, because we've just pushed, formed a range, and then this new demand here has pushed a huge surge upwards. We could also look at kind of this area for potential setups as well. Let's just have a look how this price action goes. So with the market rallying this much, it may be wise to start following the trend a little bit closer. This area here, let me explain this to you, just a little lesson on supply and demand. Basically, because we reaccumulated here and we failed to break a high, then we had this huge surge through the high. This area here that we've marked out has significant demand and significant buying pressure behind it. Otherwise, it wouldn't have made such a huge dramatic movement like that. Basically, because it was slow, then it bombed like this, it shows us that this area here saw massive levels of institutional buying or significant large orders on the buy side. That is what we're looking for when we're looking for supply and demand, right? We're looking for significant buying and selling. If you really wanted to refine this down to its purest demand zone, it would be there. But as I did with the previous setups, I prefer to just keep the daily low covered. This would be an idea of a setup. As of right now, we need to see. Maybe we formulate a little bit higher, but I do think this is going to be a good point to work off of. We consider what we've seen here as well. We have this high, higher low, push up, higher low, push up from the larger perspective. Because we've got such significant momentum here, I think buying from these areas becomes a little bit risky. I think we could potentially then go for this. Targets wise, a little bit tricky. Realistically, targeting new swing high would be okay. And then obviously what we've got here is if this trade does lose, so if we were to get stopped out, we would look for a pullback towards this area and then we could buy from there. Or what we could do to be safe if we wanted to, because obviously we don't want to stack losses, would be follow up this loss with, see how we got that confirmation style trade here? So we waited for the structure to shift and then we started buying. We could do that same thing inside of this area if we fail from this top zone. So we take one loss, but then we limit ourselves from taking 2, 3, 4 losses if the market keeps crashing through demand zones. We can continue with the trend. And if this fails, shift into that motion. So this trade's also got incredible risk reward. Once again, no clear supply, but we are in a very visible uptrend. We have this nice demand zone retest. We can buy from there. Stops under the daily zone, 7.35%, which would be a $14,000 return if this trade works. And then if it loses, we may even have better risk reward from this low point providing we get the reversal confirmation that we would want to see. So did we get tapped in or was we missed on spread there? Yeah, we are in currently. We have to set and forget this trade based on the rules. Very, very pinpoint entry there. Basically, pretty much what I explained. This is an area where massive new buying has commenced. So obviously a pullback down and retest of that level is going to be a pretty favorable point for us to start continuing higher. There is opportunity for us to break lower with the areas of imbalance that we've got. If that happens, that is fine. Well, we've got a very strong trending market here. I was going to say it would highlight the obviously different ways of approaching the system, but with such a strong bullish market, we may be okay to just fill the target. So we'll just run it through. And there we go. So this one again is a win, and that brings us to pretty much the start of July when our simulation is going to end. So with UJ, with this system, if we take a look back at the rules, daily time frame trend, buy from imbalanced demand zones, target imbalanced supply zones. Failing the imbalanced supply zones, if we can't find one to target, we would then target swing highs, right? This would also work on the sell side. If we had a bearish market, we'd be selling supply, targeting demand, or targeting swing lows. So that is a very, very, very simplified form of a system. Now this one, obviously, 6 months, 3 trades, 100% win rate. You're not going to get 100% win rate with this system, I promise. Okay, this is only 3 trades. It's a small sample. Not all markets run like this, as I'm sure you probably know. So I wouldn't get super excited about having a holy grail strategy here because there are going to be different results on different pairs as well, okay? If you're not in such a strong trending market, obviously a daily trend following trading system like this is not going to perform so well. So what I'm going to do is I'm going to go backtest Euro USD and we'll take a look at the combined results of these 3 very nice trades paired with whatever we get on EU. We've piled the analytics together just here. So we can see the total profit and loss made through these 2 tests, the same 6 months, the same trading system, was $46,000. Now, one thing to note, the account balance says $446,000. This is because I ran 2 different tests, both with $200,000 each, so it's compiled them together. But realistically, this would have been traded with the same $200,000. So the total account balance is generally 246, meaning it's around a 23% return, okay? Now, from what we can see by compiling these 2, we took 10 trades, 7 won, 3 lost. As I said in the USD JPY example, that was an incredibly clean trending market, which is pretty rare. We don't usually see that, which is why I went ahead and tested Euro USD as well. The price action on Euro was a little bit more choppy, so we actually got around a 60% win rate on that one instead of 70. I'd say that is probably more accurate because eventually this UJ trend will come to an end. You're going to have the choppier markets to work with. The majority of other markets aren't as clean as UJ, so this probably wouldn't be a 70% win rate. It's going to be closer to, let's say, 55 to 60% based on the information we've collected so far. But we can see even then, that's positive, and our positive risk reward is actually going to make us win. Even if we were losing, for example, 70% of the trades we took, 3.72 will keep us afloat, okay? So obviously, being a daily chart system, this is a very low frequency approach. We traded 6 months of data on 2 assets and we only took 10 trades, which is pretty much just under 2 trades per month, right? That's fine. If we added another asset, that might add to that again. We may have 15 trades over the 6 months. You could trade up to 4, 5, 6 different assets with a system like this because it is so passive and easy to do. A 23% return in 6 months is very, very good, especially when we have such a strong win rate of 55 to 60%, if we were to disregard, of course, the 100% win rate of UJ, and the average risk reward being so strong at 3.72, meaning every $1 we risk is, on average, bringing back $3.72 in profit. So let's take a look at some of the information we want to pick out of our back tests and our data collection in order to build a positive trading plan and make improvements in the right direction. The first thing we need to know is what is our win rate? Obviously, this small sample size, we're going to call this around 55% to kind of suit the 60% more so on Euro USD. I always like to be a bit more pessimistic as well when we're forecasting kind of how a system can do. The way around with this would be to just collect even more data. You could do another 6, 18 months of data on this system. That's going to kind of average that win rate out to something a little bit more viable to work with because you'll have more trades in your sample. But I'm not going to do that for this video. You can do that with your own systems when you get to doing this yourself. So we want to know our win rates first of all. We then want to know our average risk reward. We want to know how often trades are coming around. For this, it's around 1.8 times per month for 2 assets. If we add another asset, it might go up to around 2.6, whatever. Then we want to know how big our average winners are. We already know that from the risk reward. Average win is going to be around 3.58%. Our average loss, minus 0.93. So we're containing those losses to under 1%, which is very, very nice. Another important thing you need to know, I'll explain why, is the average duration of winning and losing trades. So we know that a winning trade is going to take on average 16 days, which is just over 2 weeks. It's going to be 2 trading weeks, 2 sets of weekend, and then 2 more trading days as well. That's fine because we know that this is a very passive, easy system. So if we know this, we actually can give the patience to our system to allow these trades to play out, because one place that traders go wrong quite a lot is they start panicking after a few hours in a trade. I need to get out. It's not moving as fast as I want it to. But when you do your backtest and you realize, okay, this trade's actually going to take 2 weeks in order to reach a profit, now you can give it that 2 weeks with confidence, knowing that on average, that's how long your system's going to take in order to pay you out, okay? If you've no idea how long your trades take, then it's very, very easy to get stressed out after a few hours or just 1 or 2 days. If you know that your winners are going to take this long, it's easier to let them run. We see our average duration for losses is half the time. They lose in about a week, but even then, we should be leaving these trades for about 2 weeks anyway to see if they can pull through. We should give them the patience to do that. And I'm not saying that you need to be trading for 3 weeks, right? You can do all this system application on a much lower time frame, like the hourly and the 15-minute if you really want to. But I'm just showing you the highlights here. So we're looking for win rates, we're looking for risk reward, we're looking for how often trades are taken, and then we're looking for how long those trades take to either win or lose when we are in them. Some other important information you can pull from your system, yet not quite as applicable to a swing trading strategy like this, would be, number 1, where are your trades taken? Where are the max risk reward trades taken? Where's the most money made, basically? We see here it's a New York session across the board, right? For a swing trading strategy, this doesn't really mean much because we're holding trades through multiple sessions every week. But when you are trading on a day trading perspective, it's good to see which is your most and least profitable session, because then you can start putting more focus into London, for example, and eliminating New York if that's unprofitable, or the other way around, whatever it is that your data provides. Same here, performance by time. It's non-applicable to swing trading. It doesn't matter when we get into trades because they're open for weeks anyway. But if you're day trading, once again, all you would want to do here is say, okay, well, maybe this time, 7 to 10 a.m. early in the morning is incredibly unprofitable for you for your day trading. Whereas let's say 12 to 1 is hyper profitable. So now you want to tailor your trading to try and find executions around this time at the start of New York and eliminate London. And you're probably starting to see now how we get that base plan like what we built and turn it into something more personalized and more impressive with stronger improvements and better performance long term, right? We're getting this info, we tailor it, we repackage it into a new approach to the system, and then we test it again until everything is optimized. Now, as we said, this system did 23%. Obviously, as I said here, because the start balance is classified as 200,000 plus 200,000, it thinks we're trading with 400,000. Realistically, that would be the same $200,000 across the board. So we're looking at around a 23% return in 6 months of trading, which is brilliant, by the way. We have around 3.4% in Jan, 6% in Feb, 3% in March, minus 1% in April and June, and then around 12 or 13% in May. Now, this is obviously a pretty good distribution. We have mostly positive months. The losing months are very small at 1%. The winning months are considerably larger than that, right? 3%, 6%, 3%, 13% almost. So that makes for a very nice distribution where we are majority profitable. And as we say, if we added more assets in as well, some of these losses would probably go away too, because we are going to hit those larger wins, right? So let's say in April we took the 1% loss, but say AUDCHF, if we bought that in, may have taken a 2-3R winner. That would then obviously overcome that loss. So as I say, we do have a pretty limited sample size here, but you're starting to see how these things come together and how we want to look at this data. Now, one thing I want to show you is this. It's a Monte Carlo simulation, and I'm pretty happy because I didn't even know this was in FX Replay. I was about to go to another website, and then I realized that this is here. So what this does is actually present to you whether or not your system is profitable or not. So if we were to run this information with the $246,000 start balance from where we are now, our average gain is just automatically calculated. It's around 3%, 3.5%. Our average loss is 1% at $2,000. Let's say we take 100 trades on this system. We'll run 5 different simulations. If we were to run that simulation, it's going to tell us the worst, best, and average outcome, okay? We could even do 10 simulations to get a larger average idea. So we can see the average balance after taking 100 trades, which is going to be a few years of trading here, would be $691,000, which is about $450,000 more in profit than what we actually have got at the start point. Best case scenario is going to be at 750. Minimum balance is going to be 608. So even if we performed as poorly as this system could possibly perform, we would still make a considerable return over 100 trades, okay? Now, as I said, I don't think this 70% win rate is considerably accurate because it will go down, right? It will go down once we have a larger sample size. We're not going to win every trade on UJ, I promise. So we're going to call it 50%, just to be a bit more pessimistic and a bit more realistic. This is then going to give us the ideas over that 100 trade sample. The average balance is going to be around 520K, max 640, minimum 430. And what we're really looking for here is an idea as to whether a system is viable or not. Now we can see here with a minimum of 100% return, that's the very worst case, by the way. This rarely ever happens. You'd have to be crazy unlucky to hit that and crazy lucky to hit this. The average is going to be around where you hit. So anywhere from 500 to 550,000 is probably a good baseline for this long-term test, right? And this also compounds, doesn't really include withdrawals. So that's something to factor in as well. But really what we're looking for, is this system profitable? Is there opportunity for it to lose? We can see with a 50% win rate, no, this system is going to win, okay? There's no way we can really lose in this system. Yes, we'll have drawdown, but we are not going to actually be losing money over the long term. If we drop the win rate to 30%, let's take a look what that looks like. Now, this isn't quite so good, right? We can see the worst case outcome. Generally, over 100 trades is going to be positive, but there is possibility. Let's actually jump this up to 40 simulations. We may start to see some going negative. Yes, as you can see, if we look at a larger average, or for example, if we looked at more trades, you'd see that, okay, more trades kind of fixes the issue, but some of these go pretty negative before they start to pull back positive, okay? So if we drop it to 20%, I think that's going to ruin the whole system based on our risk reward. You start to see, yep, we are now pretty much moving down. The only way to win in this instance, it's possible, but would be pure luck. And you're not going to perform well trading like this over the long term, okay? So this simulator here is really solid for working out what kind of win rates and stuff you're going to need and the averages that you can expect to achieve on your system. So from what I've showed you, you understand the importance of building out a trading plan, and you're starting to see how this can absolutely change the game for you. If you build out a plan like this and then you apply it in a tested, simulated scenario, you can start to build experience, build information, and understand how to better your systems. It will give you a good idea as to whether what you're doing is actually going to be a profitable long-term approach to trading, and if not, you can fix it, and if it is, you can improve it even further. My guess is you probably haven't done any of this. If you have, congratulations, you need to do more of it and you need to do it better. But if you haven't gone ahead and done some backtesting, you haven't tried to build a trading plan, it's fine if you didn't understand that this was a thing, but this is the most important element in trading. Now you can stop trading based on hope like you are, and you can start looking at some of this very important information that our systems show us when we test them like we have in this video. So you need a systemized process rolled into a trading plan that pretty much automates inside of your mind the risk management and all of the technical and fundamental analysis processes that you will be using to find your trades. Entry criteria, exit criteria, trade management, risk per trade, risk rewards, all of that stuff. It needs to be systemized into a trading plan, and that is how you are going to reach success. Now, we've covered a lot over the past 2 classes. If you haven't watched the first one, there's a link at the top of this video. But there's still a bit more that we need to cover. In the first class, I talked to you about a 4-step process that I was going to show you that would help you to become a profitable trader. But I put it off because I wanted to cover this first and teach you about trading plans and the importance of building a strategy and testing it before we start talking about a 4-step process you can use to become profitable in the next 12 months. So I'm going to join you with one more class in just a few days. And when I do, I'm going to teach you the 4-step process to building success and becoming a profitable trader. This is what my students have used, and my students have made lots and lots of money and achieved some serious results through following this exact process that I'm laying out for you in the next class. So catch up with me on this 4-step process and a few other lessons to send you on your way to become profitable in the next 12 months. The class will be out on Wednesday, the 27th of November, and I will see you there. If you want updates in the meantime, hit the link in the description and join my Telegram channel. It's 100% free, and there's going to be some extra classes and lessons in there for you. So thank you for watching, and I'll see you on Wednesday.